Good morning, dear students. This is Vijay Lakshmi here, your business studies teacher. Today we will start with Unit 10, that is financial markets. Under it, we will study about the meaning of financial market, money market, capital market, primary and secondary market, stock exchanges, and security exchange and Board of India. Right now, first of all, we must know the meaning of financial management. Our business, it is part of an economic system that consists of two main sectors. कि इकोनॉमिक सिस्टम मीन्स कहाँ से मनी बिजनेस में मनी का सर्कुलेशन होता है, थ्रू हाउस होल्ड और थ्रू बिजनेस फर्म्स. हाउस होल्ड मीन्स दे सेव फंड्स एंड आर नोन एज सेवर्स, एंड बिजनेस फर्म्स दे इन्वेस्ट फंड्स एंड आर नोन एज इन्वेस्टर्स. Financial market acts as a link or an intermediary between these two sectors. It enables the savers to invest their surplus funds and enable the investors to borrow funds to meet their requirements. In doing so, it performs allocative function. Now, it are directly savers, they do not know to whom funds are required, and investors, they do not know from where to arrange the funds. So, financial market, they play this allocative function. And allocative function of financial market refers to linking the savers and investors by mobilizing funds between them. So it allocates or directs funds available for investment into their most productive investment opportunities. While performing the allocative function, two consequences follow. The rate of return offered to household would be higher, and scarce resources are allocated to those firms which have the highest productivity for the economy. There are two mechanisms through which funds can be allocated or mobilized from household to business firms. First one is banks. Households can deposit their surplus funds with banks, who in turn lend these funds to the business firms. Savings बैंक में जाती है और बैंक इन सेविंग्स को आगे इन्वेस्टर्स को lend कर देता है in the form of loans. And second sector is financial market. Households can buy securities, shares, long term as well as short term securities from the financial market to provide funds to business firms. And the process by which allocation of funds is done is called financial intermediation. Right? Now, first, we must know the meaning of financial market. Financial market includes whole network of all organizations and institutions that provide short, medium and long term funds. And a financial market is a market for the creation and exchange of financial assets. Main functions of financial market are mobilizing savings and channelizing them into most productive uses. Means it is known as allocative function of financial markets. These markets facilitates the transfer of savings from savers to investors by providing the choice of different investment options to the savers. Second one is facilitate price discovery. Price of anything is determined through the market forces of demand and supply. Now, but अगर demand ज़्यादा होगी तो you will get more price for your product. Same way in the financial market, household supply funds and business firms make demand. The interaction between them helps to establish a price of the financial asset which is being traded in that particular market. Next is providing liquidity to financial assets. Financial assets facilitates easy purchase and sale of financial assets. So it provides liquidity, means to convert them into cash, as they can be easily converted into cash as and when required. Next is reduces the cost of transactions. Financial markets provide valuable information about securities being traded in the market. So it helps to save time, effort and money that both buyers and sellers would have to otherwise spend to try and find each other. Now next one is types of financial market. Mainly there are two types, money market and capital market. Money market trades in instruments with a maturity of less than 1 year, and capital market trades in instruments with medium and long term maturity. Again, capital market, it is of two types, primary and secondary market. Now next one is money market. Let's study in detail about money market. Money market refers to the market for short term funds which deals in monetary assets whose period of maturity is up to 1 year. It has no physical location and most of the activities are conducted over telephone and internet. Money market satisfies short term financial requirements of business and temporary डिप्लॉयमेंट ऑफ एक्सेस फंड्स फॉर अर्निंग रिटर्न्स, कि कहीं हमने इन्वेस्ट करना है शॉर्ट टर्म के लिए, मनी मार्केट इज़ द बेस्ट ऑप्शन. Major participants of money market are Reserve Bank of India, commercial bank, non-banking finance companies, state governments, large corporate houses and mutual funds. Money market instruments are of highly liquid nature and they are of comparatively less risky nature. Main features of money market are: it is a market for short-term funds. Instruments of money market are quite expensive. Money market instruments are highly liquid. These instruments are less risky and the expected return from money market instrument is less due to short duration. Main instruments of money market are, mainly there are 5 instruments: treasury bill, commercial paper, call money, certificate of deposit and commercial bill. Now treasury bill. It is an instrument of short-term borrowings issued by RBI. Short-term borrowings issued by RBI on behalf of central government or Indian government. The other name for it is zero coupon bonds. They are issued in the form of promissory note. They are highly liquid and have assured yield and negligible risk of default due to soundness of RBI. Minimum amount, one treasury bill is of 25,000 and after that we have to buy it in multiples of it. They are issued at a price less than the face value and redeemed at its face value on maturity. That's why we call them zero coupon bonds, because they are issued at discount and redeemed at face value. The difference between the issue price and redemption value is the interest receivable on them and is called discount, right? Next one is commercial paper. Commercial paper is a short-term, unsecured, negotiable promissory note with a fixed maturity period which is issued by large and credit-worthy companies. Now, a commercial paper is issued by credit-worthy company to raise short-term financial needs at lower rates of interest than the market rates. It is a negotiable instrument, freely transferable by endorsement. A commercial paper is unsecured investment issued only by large credit-worthy companies. It is usually has maturity period of 15 days to 1 year. It is issued to raise short-term funds at lower rates to interest than market rates. It helps to satisfy short-term requirements of funds like seasonal and working capital needs. It is sold at discount and redeemed at par. And other name for this is bridge financing also. ट्रेजरी बिल का अदर नेम है जीरो कूपन बॉन्ड. कमर्शियल पेपर का दूसरा नाम है ब्रिज फाइनेंसिंग. सपोज ए कंपनी वांट्स टू रेज लॉन्ग टर्म फाइनेंस थ्रू शेयर्स और डिबेंचर्स. फॉर दिस कंपनी विल हैव टू इनकर फ्लोटेशन कॉस्ट. सो फ्लोटेशन कॉस्ट को भी मीट करने के लिए कमर्शियल पेपर्स आर इशूड. Such and brokerage cost of issue of prospectus, etc. Commercial paper is used to meet such flotation cost, which is known as bridge financing, right? Third type of instrument is call money. It is a short-term finance repayable on demand whose maturity period varies from 1 day to 15 days and it is used for interbank transactions. The interest rate paid on call money is known as call rate, which is highly volatile, that varies from day to day and even from hour to hour. There exists an inverse relationship between call rate and other short-term money market instruments. और अपन बैंक्स जो हैं अपनी कैश रिजर्व रेशो को मेंटेन करने के लिए इट इज़ बीइंग इशूड. जब भी आरबीआई अपनी सीआरआर को चेंज करता है तो बैंक्स नीड टू मेंटेन देयर कैश रिजर्व रेशोज इन द बैंक विद द आरबीआई. सो बैंक्स एक दूसरे की म्यूचुअली हेल्प करते हैं. कमर्शियल बैंक्स 1 दिन से 15 दिन टेलीफोनिक ट्रांजेक्शन्स हो जाते हैं इसमें एंड लेटर ऑन पेमेंट इज़ बीइंग मेड. राइट बच्चे. नाउ नेक्स्ट इंस्ट्रूमेंट इज certificate of deposit. It is an unsecured negotiable short-term instrument in bearer form issued by commercial banks and development financial institutions against the deposits kept by companies and institutions. These are issued to individuals and corporations during period of tight liquidity when the deposit growth of bank is slow but the demand for credit is high. They help in raising a large amount of money for short periods. And last one is commercial paper. Commercial bill. It is a bills of exchange used by business firms to finance their working capital requirement. Short-term negotiable self-liquidating instruments which is used to finance the credit sale of firms. When goods are sold on credit, the buyers become liable to make payment on specific date in future. The seller could wait till the specified date or make use of bills of exchange, right? Now, next one is capital market. It refers to the whole network of all organizations, institutions, and instruments that provide medium and long-term funds. It consists of series of channels through which savings of the community are made available for industrial and commercial enterprises. It encourages people to invest their small savings. Capital market consists of developmental banks, commercial banks, stock exchanges. The process of economic development is facilitated by existence of well-functioning capital market. Now, main difference between capital market and money market. The participants of capital market are financial institutions, banks, corporate entities, etc. The participants of money market are RBI, banks, financial institutions, financial companies, etc. कैपिटल मार्केट के इंस्ट्रूमेंट्स हैं बेटा इक्विटी शेयर्स, डिबेंचर्स, बॉन्ड्स, प्रेफरेंस शेयर्स एटसेट्रा. मेन इंस्ट्रूमेंट्स ऑफ कैपिटल मार्केट आर इक्विटी शेयर्स, डिबेंचर्स, बॉन्ड्स, प्रेफरेंस शेयर्स. एंड मनी मार्केट इंस्ट्रूमेंट्स आर ट्रेजरी बिल, कॉल मनी, कमर्शियल पेपर, commercial bill, etc. Investment quality of capital market is capital market requires less investment from investors point of view. 10 रुपए से लेके no even small savings can be subscribed, but in money market normally huge amount is required for investment. Duration of capital market is medium and long. Money market duration is up to 1 year. Capital market are liquid as they are marketable on stock exchange. However, a share may not be actively traded, that is may not easily find a buyer. But money market instruments enjoy a higher degree of liquidity as Discount Finance House of India has been established for specific objective of providing ready market for them. Now next is components of capital market. There are mainly two components, primary market and secondary market. Now primary market. Primary market refers to the market where securities are sold for the first time. Due to this reason, it is known as new issue market also, NIP. When securities are issued by the company for the first time, it is known as activity of primary market. The essential function of primary market is to facilitate the transfer of investable funds from savers to entrepreneurs seeking to establish new enterprises or to expand existing ones. The investors in this market are banks, financial institutions, insurance companies, and individuals. The common securities through which the company can raise capital in primary market are equity shares, preference shares, debentures, etc. Funds raised may be for setting up new projects, expansion, diversification, modernization, etc. Primary market directly contributes to capital formation. Now methods are methods of flotation or methods to issue new securities. There are 5 methods of flotation: offer through prospectus, offer for sale, private placement, right issue, and EIPOs. First is offer through prospectus. Under this method, company invites public to apply for its securities through issue of prospectus. It is the most popular method of raising funds. Prospectus makes a direct appeal to investors to raise capital through an advertisement in the newspaper or magazines. The issue of required is to be listed at least at one stock exchange. The contents of prospectus should be in accordance with the provisions of Companies Act and SEBI disclosure and investor protection guidelines. Second is offer for sale. Under this method, securities are not issued directly to the public. Directly, public is not invited to buy the shares, but they are first issued to intermediaries like issue houses and stock brokers at fixed price. The intermediaries in turn resell the securities to the investing public at higher price. This method saves the company from formalities and complexities of issuing securities directly to the public. Third one is private placement. Under this method, company sells the securities to some selected institutional investors and individuals. This helps to raise the capital more quickly as compared to public issue. It is also economical as it saves the various mandatory and non-mandatory expenses of public issue. Third is right issue, and fourth one. Under this method, company offers the new shares to its existing shareholders in proportion of shares already held by them. It gives preemptive right to the existing shareholders to subscribe to new shares according to the terms and conditions of company. If existing shareholders do not subscribe to the securities during the prescribed time, then the offer is open for the general public. Next one is eIPO. Under this method, company issues capital to public through online system of stock exchange. This is latest method. The IPOs by the company is known as eIPO. It makes use of electronic technology. Under this, issuing company enters into an agreement with stock exchange and has to appoint SEBI registered brokers to accept applications and place orders with the company. A register having electronic connectivity with stock exchange is to be appointed. Securities have to be listed on any exchange other than the exchange through which company has earlier offered its securities. Now next one is secondary market. Secondary market refers to the market for sale and purchase of previously issued securities. जो बेटा कैपिटल मार्केट प्राइमरी मार्केट में सिक्योरिटीज इशू हुई, उनको बाद में जब इन्वेस्टर्स आपस में विद द हेल्प ऑफ स्टॉक एक्सचेंजेस बाइंग एंड सेलिंग करते हैं, इट इज़ नोन एज एक्टिविटी ऑफ सेकेंडरी मार्केट. It is also known as stock market or stock exchange. It helps existing investors to disinvest and fresh investors to enter the market. It provides liquidity and marketability to existing securities. Secondary market also contributes to economic growth. Securities are traded, cleared and settled within the regulatory framework prescribed by SEBI. And within advancement and information technology, trading through stock exchange can be done from anywhere in the country through trading terminals. Under it, securities are exchanged between the investors, so company is not involved in sale and purchase of securities under secondary market. Now difference between primary and secondary market. Primary market deals with new securities. Secondary market deals in sales and purchase of existing securities. Process of transactions in primary market is company sells securities, and under secondary market the ownership of existing securities exchanged between investors. Primary market promotes capital formation directly. Secondary market promotes capital formation indirectly. Under primary market only buying securities takes place in the primary market, only buying, but in secondary market buying and selling, both the activities. Primary market is determined and decided by the management of the company, its prices. But under secondary market, prices of the securities is determined on the basis of demand and supply of securities. For primary market, there is no fixed geographical location, and secondary market, it is located at specified places. That's all for this particular topic. In next lecture, I'll discuss the topic of stock exchanges and functioning of SEBI. Thank you, children. Thank you very much.